when it happens, it will overnight, everything will change. There will be no metal left.
When the system is breaking down, systemic risk of the system is why people were rushing into gold and silver. But what does it look like, or what are those times when we can't function then as a dealer to help people continue to do that if the system is actually breaking down?
All right, so the first part of the question is, I've been selling gold and silver for 33 years when nobody wanted it, when it was $252 an ounce and $3 and $4 an ounce in silver. I've been accumulating it because it's wealth. And I mean, I'm not Bill Gates. I can't buy everything up. I've been buying it every 2 weeks. I believe in it to my soul. I tell every one of my employees when I hire them, you better buy every 2 weeks. Don't let me find out you're not. I mean, that question I find to be incredibly naive. Like, you know, I built a business from scratch, from nothing, coming from nothing, because I believed in something, and I had strong enough fingertips to hang on for 33 years to finally get to a point where everyone recognized it. And yet it's still only 0.5% of the entire allocation in this country. So yeah, I believe in it, and I'm the minority who believes in it, and I buy it every 2 weeks, and I think it's the road to financial freedom, and I think it is the road to financial salvation when the you-know-what hits the fan. And I'll sell it independent of what I buy. I'm not selling my own gold and silver, but I will sell it until I can't any longer. And as far as that, what does it look like? When the what does it look like doesn't work anymore, if the COMEX breaks, no one can, for a period of time until something is figured out, can hedge their inventory. So holding inventories will be detrimental. If money's not flowing, we'll shut things down until it does again. I mean, it's a scary situation to even contemplate things like that, but they are a reality. So when you talk about incentivizing, look, people are motivated by greed and by fear. In the last 2 decades, people have been motivated by greed. You go back to 1982 even, and you see interest rates going down in a steadily 45-degree sloping angle, creating tremendous value in traditional assets. People were greedy, and they were well rewarded by putting their money into stocks and bonds and real estate. But let me tell you something. What I witnessed yesterday and today, that fear, where people are calling me at 1:30 in the morning, and I answer because I'm doing paperwork. Oh, I'm so sorry, Andy. I'm calling from California. I thought I was going to leave you a message, but while I got you, can I talk? I'm terrified. And, you know, I think that there is nothing that will motivate people quite like fear when things start to break apart. We have lived under a period of time where it is our birthright to live better than our parents and our grandparents. That's what we always thought. And I think that, you know, when people say, well, when the market breaks, it always comes back. Look at what it took to get it back from 2008, an expansion of the Fed balance sheet by over $8 trillion, all of it in interest-bearing assets, U.S. Treasuries and mortgage-backed securities, to lower interest rates, to make the stock market and the housing market seem better than it is, to increase speculation and debt accumulation. It's all a facade. And when it comes down, when you talk about credit, the amount of credit that is needed in this system is paramount. Bill Holter talks about the amount of credit needed to bring a loaf of bread to the market. The loaf of bread, think about it. The farmer goes on credit to buy the combine, the diesel fuel, and the seeds to plant his field. When he's done harvesting, he takes that grain and sends it by truck to the flour mill. The trucking company is on credit to buy the trucks and the diesel fuel, and then sends it to the flour mill that's on credit to run the flour mill, and then sends it back on the truck that's on credit to get it to the baker, who's on credit to make the bread, who's on credit in the truck again to send it to the grocery store, who uses credit. And if credit dries up, it all dries up. It's a situation where just as bullish, and again, some of this is, you know, hyperbole and tongue in cheek a little bit, but you get the point. And just as bullish as easy money and abundant credit was for the markets, where hedge funds can borrow at next to nothing and plow it into assets, make a fortune, where companies can buy back their shares by borrowing money at 1% and make a fortune, pay off those debts with no problem at all. It will be equally or exponentially more bearish because of the leverage and the derivatives as they yank the credit back and make it more difficult. And I think that's exactly what's going to happen. That's why you see $2 trillion in the overnight repo market. The banks don't want to lend into an economy they know is fractured. They would rather get 4% with safety than make 4 times that, 5 times that in a credit card, or twice that in a mortgage or a home equity loan. The writing is on the wall. And when the FDIC told us there were going to be breaks in the system in November, more people should have listened. This was a wake-up call, and watching the fear, which was oozing off of people as they called us over the last 2 days, is exactly what will happen. And it will happen over a weekend. I always said, when the BRICS make this announcement, it'll be on a Sunday night when we're all asleep, and we will wake up to limit down across the board on all the markets, and a whole new reality when Saudi Arabia and OPEC says, hey, thanks for the memories, we're moving to the BRICS commodity-backed currency, and with the rest of our OPEC producing brothers and sisters on the Belt Road Initiative. It's coming. So, yeah, I think what we saw yesterday was a precursor, and them doing what they did was in an effort to pull us back from falling over the abyss. I think it was that close to happening. And I wouldn't doubt for a moment that they're reliquefying a handful of banks under the table right now and not telling us about it. All these banks that are on the cusp of failing as our dollar becomes worth less and less and less and less.
Back to the question about where's the metal that should have been coming out of the mint. One of the most popular forms of metal in the last 3 years coming out of the U.S. Mint hasn't come out of the mint since 1964, and that's junk silver, 90% constitutional silver currency. Anonymous says, Andy, do you have any ballpark estimate of how much, quote, junk silver has been melted down over the years and how much has survived?
I have no idea, but I'll tell you that I have standing orders for $1 million worth right now. And I really can't find any. We sold a bunch recently, and I had a lot of it, but this is always, to me, an indication of what the supply is like. Why? Because you can't reproduce something that hasn't been made since 1964. Well, what happens if the mints go offline? A couple of them even. If you realize there are 6 major mints in the world, and when they shut down or go offline, that's it. You got a handful of refineries, but they can't keep up. So, a lot of, people, what's the old saying? You never realize how much you value something until it's gone. Well, people take for granted. And I oftentimes lately, I find myself thinking, even late at night, like, why are the mints selling their gold? Why are these countries doing it? I could see that stopping. You asked me what could put me out of business. The mint's saying we need to nationalize all of our country's gold and silver. It needs to be held by the government. And I would think they would do that before they would confiscate it. When countries like China and Russia are promoting it to their citizens, in this country, so few people own it, it wouldn't make sense to do that. But I could see the mints just not selling to the West anymore, or just keeping it for their own citizens, or whatever it is that they're doing. I think about that a lot lately. Like, where we're going, what is the likelihood that they continue to release Australian kangaroos or UK Britannias or South African Krugerrands? Isn't it in their best interest to not? We've lived at a period of time that was orderly and systematic. And if that all breaks down, then what? So, I think this is a lot more than it used to be. And fortunately, the people who have listened to you, Dunnigan, for quite some time, and even when you were reluctant preppers, I love that name. No one prepares willfully. Most people prepare reluctantly because they don't want to think about the potential. Just like filling out a life insurance application, you do it reluctantly. You don't want to think about your own mortality. Well, wake up. We're all going to die, and all good things come to an end, including the World Reserve Standard. And this is something that the public will be caught off guard because, as that person said earlier, where's the media through all of this? Why aren't they telling us? Why don't you ever hear that Social Security is $76 trillion in debt? Why don't people know how big a trillion is? I mean, why are these little questions that seem so obvious to me? No one knows.
Yep.
And I think that when you put it together and start to listen and look at the balance sheet of the world reserve currency, where the largest asset is student debt, 31% of our asset base, it should say a lot about a country that's 130 trillion in debt and making idiotic decisions with the monetary policy, and in this case, backing up banks that should have been allowed to fail. That is the law. They should have allowed it, and now they've just set precedents that will only hasten the demise of the dollar.